What if I told you Wall Street's top minds have zeroed in on 3 stocks primed for explosive growth? Today, I'm revealing exactly what they are, and why analysts are buzzing. We'll cover a digital sports and gaming leader, a mental health innovator, and a global energy tech giant, all with serious upside. These aren't just tickers, they're stories driving real change and opportunity. The market moves fast, so pay close attention. These picks could define your portfolio. Hit like, share your thoughts in the comments, and subscribe for more high-conviction investing ideas. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Let's dive in. First up, DraftKings, ticker DKNG, a name that's become synonymous with the digital sports revolution. In just a few short years, DraftKings has transformed from a niche fantasy sports provider into a household name, fundamentally changing how millions of Americans engage with sports and entertainment. DraftKings started with daily fantasy, but now dominates online sports betting and iGaming, a market expanding rapidly as more states legalize online wagering. The company's ability to pivot and scale as regulations evolve has been nothing short of impressive, allowing them to capture new audiences at a record pace. Every new state is a multi-billion-dollar opportunity, and DraftKings is first to move, capturing market share with speed and precision. Their aggressive rollout strategy means they're often the first name sports fans see when betting becomes legal in their state. Their brand is everywhere, thanks to partnerships with the NFL, NBA, and MLB, making them the go-to platform for millions of fans. These high-profile deals not only boost visibility but also build trust, cementing DraftKings as the default choice for both casual and hardcore sports enthusiasts. But it's not just about acquiring users, it's about keeping them. DraftKings' ecosystem, sports betting, fantasy, casino games, keeps customers engaged and loyal. Their platform is designed to offer something for everyone, whether you're a fantasy sports veteran or a newcomer to online gaming. The more products a user tries, the more valuable they become, fueling long-term growth. This cross-sell strategy is a key driver of DraftKings' impressive customer lifetime value, as users who start with one product often branch out to others, deepening their engagement. Revenue is surging, consistently beating expectations. Analysts love their aggressive expansion, seeing it as a smart investment for future dominance. DraftKings' quarterly reports routinely highlight double-digit growth in both active users and revenue per user, signaling robust demand. Yes, they're spending big on marketing, but it's the classic playbook. Build a massive user base now, profit later. Think Amazon, in its early days. This upfront investment is designed to lock in market share before competitors can catch up, setting the stage for long-term profitability. Their tech is top-notch, a slick, reliable app and constant innovation keep users coming back. DraftKings invests heavily in user experience, ensuring their platform is intuitive, fast, and packed with features that keep players engaged. iGaming, online slots, blackjack, and more, is even more lucrative than sports betting in legal states, offering higher margins and steady revenue. As more states open up to online casino gaming, DraftKings is well-positioned to capture this high-margin business. The total addressable market is huge, tens of billions in North America alone, and DraftKings is a clear leader. With only a fraction of the market currently penetrated, the runway for growth is enormous, and DraftKings is at the forefront of this expansion. Every earnings report shows more users, higher revenue per user, and new market launches, momentum that's hard to ignore. The company's ability to consistently deliver on growth targets has made it a favorite among both retail and institutional investors. DraftKings' data-driven approach personalizes offers and optimizes marketing, creating a powerful flywheel effect. By leveraging advanced analytics, they can target users with the right promotions at the right time, increasing engagement and retention. Top analysts from Morgan Stanley and Goldman Sachs are bullish, citing DraftKings' market position, tech edge, and clear path to profitability. Their research notes highlight DraftKings' ability to outpace competitors and adapt to changing market dynamics. Risks? Sure, competition and regulation. But analysts believe the upside far outweighs the risks. The company's proactive approach to compliance and its strong brand recognition help mitigate many of these challenges. As the company scales, operating leverage improves, meaning more profit from every new dollar of revenue. This efficiency is expected to accelerate as fixed costs are spread across a growing user base. Sports betting is now mainstream, and DraftKings is at the center of this cultural shift. The company's presence is felt everywhere, from living rooms to sports bars, making it a key player in the new era of fan engagement. The story is simple: a massive, underpenetrated market, a dominant brand, and a clear growth trajectory. DraftKings is executing on all fronts, with a strategy that's both ambitious and achievable. Multiple analysts are raising price targets, convinced the market underestimates DraftKings' long-term potential. As the company continues to deliver, Wall Street's confidence only grows. In summary, DraftKings is a dominant player in a booming industry with a strong brand, superior tech, and a powerful growth runway. Their relentless innovation and market leadership make them a standout in the digital gaming space. That's why it's a top analyst pick, and why it could be a game changer for your portfolio. For those seeking exposure to the future of entertainment and technology, DraftKings offers a unique blend of growth and innovation. If you're looking for exposure to the future of digital entertainment, DKNG is a bet worth considering. The company's vision extends beyond just betting. It's about creating a digital entertainment ecosystem that keeps users coming back for more. The company's relentless focus on user experience and innovation sets it apart from the competition. DraftKings is constantly rolling out new features, games, and experiences to keep its audience engaged and excited. DraftKings is not just riding the wave, they're helping create it. Their influence is shaping the future of how fans interact with sports, gaming, and digital entertainment. Their expansion into new markets and products keeps them ahead of the curve. Whether it's launching in a newly legalized state or introducing innovative gaming formats, DraftKings is always pushing forward. The company's leadership team is experienced and laser-focused on growth. Their strategic vision and operational expertise have been key to DraftKings' rapid ascent. DraftKings' ability to adapt to changing regulations gives them a strategic advantage. Their proactive approach to compliance ensures they're always ready to capitalize on new opportunities as they arise. The stock's volatility is typical for high-growth companies, but the fundamentals remain strong. For investors with a long-term perspective, these price swings can present attractive entry points. Analysts see DraftKings as a long-term winner in the digital gaming space. The company's combination of scale, technology, and brand power is tough to match. For investors seeking growth, DKNG offers a compelling opportunity. The company's trajectory suggests there's still plenty of upside ahead as the digital gaming market matures. Let's move to our next high-conviction pick. Next, let's talk about GH Research, ticker GHRS, a biotech innovator targeting one of the biggest unmet needs in medicine today: treatment-resistant depression, or TRD. This is a condition that affects millions of people worldwide, many of whom have tried multiple therapies without relief. GH Research is on a mission to change that narrative, and their approach could mark a turning point in mental health care. GH Research is developing GH001, an inhalable therapy that's already showing rapid and durable antidepressant effects in early clinical trials, sometimes within a single day of administration. This is a significant leap forward, as most current antidepressants can take weeks or even months to work, if they work at all for these patients. This isn't just another antidepressant, it's a fundamentally new approach for patients who haven't responded to existing treatments. For people living with TRD, the hope of a fast-acting, effective therapy is nothing short of life-changing. The market for effective depression therapies is massive, with millions of patients seeking better options, and the need for new solutions is urgent. Mental health disorders are a leading cause of disability worldwide, and the economic and social burden is staggering. Analysts are excited by the early data, fast-acting, long-lasting results that could transform mental health care as we know it. If these results hold up in larger trials, GH001 could become a game-changer for both patients and the industry. GH001's inhalable delivery allows for rapid uptake and precise dosing, a key advantage over traditional pills or injections. This method not only improves patient experience but could also lead to better adherence and outcomes. The company is laser-focused on advancing GH001 through clinical trials, with a strong balance sheet to fund development. Their disciplined approach to research and spending gives them a solid runway to reach key milestones. Management has deep experience in drug development, giving analysts confidence in their execution. Their leadership team has a track record of bringing innovative therapies to market, which is crucial in the high-risk world of biotech. The risk is real, biotech is always high stakes, but the potential reward is enormous if GH001 succeeds. Investors should be aware that setbacks are common in this space, but the upside can be transformative. Analysts see a blockbuster opportunity. A successful launch could mean billions in annual sales and a major re-rating for the stock. The addressable market is huge, and even a modest share could drive significant revenue. Each positive clinical milestone is a catalyst, de-risking the story and driving potential upside. Every step forward builds confidence in the science and the company's ability to execute. GH Research isn't just a one-drug company. Success in TRD could open doors to other psychiatric and neurological indications. Their platform could be applied to a range of disorders, multiplying the long-term opportunity. The company is part of a broader renaissance in psychedelic-inspired medicine, but with rigorous science and discipline. Unlike some players in the space, GH Research is focused on evidence-based development and regulatory approval. Top healthcare analysts are bullish, citing the strong early data, focused strategy, and undervalued stock price. Many believe GHRS is flying under the radar compared to larger biotech names. The key catalyst, upcoming clinical trial results. Positive data could send the stock soaring, attracting new investors and strategic partners. For investors with higher risk tolerance and a long-term view, GHRS offers a unique shot at both impact and returns. It's a rare chance to invest in a company that could change the standard of care for a major disease. The company's innovative approach could change millions of lives and create immense value for shareholders. If successful, GH Research could become a household name in mental health. GH Research is a classic high-upside biotech play. Big risk, but potentially even bigger reward. The story is still unfolding and the next chapter could be pivotal. The market is watching closely for the next data readout. All eyes are on GHRS as anticipation builds for the results that could define its future. If GH001 delivers, GHRS could become a leader in mental health therapeutics, setting new standards for innovation and patient care. The company's focused pipeline and strong financials set it apart from many small biotechs. Their disciplined execution and clear vision are key strengths. Analysts believe the current valuation doesn't reflect the true potential if their lead drug succeeds. There's significant room for upside as the story unfolds. For those willing to take the risk, GHRS is a compelling story in the making. It's a chance to be part of a breakthrough in mental health. The mental health revolution is just beginning, and GH Research is at the forefront, driving innovation and hope for patients worldwide. This is why it's earned a spot as a top analyst pick. GHRS is a name to watch as the mental health landscape evolves. Now, let's turn to our final stock, an energy giant with a future-proof strategy. Ready for the next big idea? Let's go. Our final pick is Schlumberger, ticker SLB, the world's leading energy technology provider, and a company that's been at the heart of the global energy industry for nearly a century. SLB is the backbone of global energy, supplying critical technology and services not just for oil and gas, but also for the rapidly expanding clean energy sector. Their expertise and reach make them indispensable to the world's energy infrastructure. As energy demand continues to rise, especially in fast-growing developing markets, oil and gas companies are ramping up investment to meet the world's needs, and SLB is their go-to partner for both traditional and innovative solutions. Analysts see a new upcycle in energy spending, with SLB capturing more business, commanding higher prices, and expanding its market share as the industry evolves. But SLB isn't just about oil and gas. They're a true technology powerhouse, leveraging artificial intelligence, automation, and digital solutions to make drilling safer, more efficient, and significantly greener than ever before. Their new energy division is a game-changer, investing heavily in cutting-edge areas like carbon capture and storage, hydrogen production, geothermal energy, and sustainable lithium extraction for batteries, paving the way for a cleaner energy future. This dual strategy, profiting from today's energy needs while building tomorrow's solutions, makes SLB a rare long-term winner, uniquely positioned to benefit from both the current energy landscape and the global shift toward renewables. Financially, SLB is a cash flow machine, returning billions to shareholders through consistent dividends and aggressive share buybacks, all while reinvesting in future growth. Their global reach, operating in over 120 countries, gives them unmatched diversification and stability, allowing them to weather regional downturns and capitalize on opportunities wherever they arise. SLB's technology moat is massive. Decades of research and development, a huge patent portfolio, and a reputation for reliability that's trusted by the world's largest energy companies. As energy markets heat up, SLB's pricing power and margins are expanding, reflected in strong recent earnings, and a robust outlook for the years ahead. Even after a solid run, analysts see the stock as attractively valued, especially given its growth prospects, technological leadership, and exposure to both legacy and emerging energy markets. The rebrand to SLB signals their evolution from a traditional oil field services company to a global energy tech leader, embracing innovation and sustainability at every level. Of course, there are risks. A global recession or a sharp drop in oil prices could hurt, but SLB's resilient business model, strong balance sheet, and diversified operations help them weather downturns better than most. Years of underinvestment in energy infrastructure have created a supply gap, supporting higher prices and more business for SLB as the world scrambles to secure reliable energy sources. Analysts at JP Morgan and Bank of America are bullish, citing SLB's dominant position, technological edge, and exposure to both traditional and new energy as key reasons for their optimism. SLB is like the Intel of energy, critical infrastructure for the entire industry, but with less risk than exploration companies and more upside as the world electrifies and modernizes. Their new energy division offers significant upside as the world transitions to cleaner power, giving investors exposure to the next wave of energy innovation. For investors, SLB is a smart way to play both the present and future of energy, balancing stability with growth potential in a single stock. The company's commitment to innovation and shareholder returns makes it a blue-chip pick, trusted by institutional and individual investors alike. SLB's global footprint and diversified revenue streams provide stability in a volatile sector, making it a reliable anchor in any energy-focused portfolio. The company's leadership is focused on sustainable growth and long-term value creation, with a clear vision for navigating the energy transition. SLB's blend of value, growth, and income is hard to match in the energy space, offering a rare combination of defensive strength and offensive opportunity. For those seeking a durable, future-proof investment, SLB stands out as a company that's not just keeping up with change, but driving it. That's why it's a top pick among Wall Street's best analysts, consistently earning high marks for its strategy and execution. In summary, SLB is powering the world today and building the energy solutions of tomorrow, bridging the gap between legacy fuels and the clean energy revolution. It's a compelling opportunity for investors looking for both growth and resilience, with a proven track record of navigating industry cycles. The energy transition is underway, and SLB is leading the charge, innovating, adapting, and setting the pace for the entire sector. If you want exposure to the future of energy, SLB deserves a spot on your watch list as a forward-thinking, resilient investment. Let's wrap up with your next steps as an investor. Ready to take action and position yourself for the future of energy? Here's what to do next. Review your portfolio, consider your energy exposure, and decide if SLB fits your long-term goals. There you have it, 3 high-conviction stocks with powerful stories and strong analyst backing. DraftKings, GHRS, and SLB each offer unique growth opportunities for your portfolio. Want to level up your investing? Check out my Value Stocks Investing Master Course, link in the description. You'll learn proven strategies to spot undervalued companies and build lasting wealth. For exclusive stock tips and real-time trade alerts, join the Stocks Galore Patreon, details below. Now I want to hear from you. Which of these 3 stocks excites you most and why? Drop your pick in the comments. Like, share, and subscribe for more top investing ideas. Thanks for watching, and I'll see you in the next one. Stay smart, stay invested. Until next time.